This is the YouTube version around the adjustments for Toa Travelling Club. What we're going to do is make the adjustments and to Toa Travelling Club and do the classifications, and then you will go and do the financial statements. So the adjustments are found at the bottom. And so the first adjustment we have is kitchen closing balance, $300. So we're going to add it here as a current asset. And it's called kitchen inventory. And put the end date there. That becomes for us a current asset. If we put something on the debit, we also have to balance it with a credit. So these two figures here are always the same. Added 300 here, so we add 300 on this side. I'm just going to type equals. And this one here is a negative expense. It's a negative cost of goods sold, which will go in your your kitchen activity statement. First one's done. Second one, subs 250. 8 members have paid in advance and 3 are owing. So subscriptions in advance is a liability. So we put it on the credit side. And there are 8 members times $250. The rule, if it's in advance, both things happen on the same side. So if we add a liability on the credit side, where do you think it's going to do the other half of the adjustment? Subscriptions here. So we're going to take it off subscriptions. Because it's in advance, it belongs to next year, not this year. So we're taking it off this year's accounts. Great. 3 are owing. So 3 members owe these subscriptions for this year. So that's called subscriptions in arrears. And it's 3 members. That's a current asset because they owe us money. That money's ours, it's just in their accounts. So we'll chase that up, get that money back. And we add it on the debit side, so we also have to add it on the credit side. And so you're just going to add it. That's $750. See, both sides still balance, which is what we want. Bus expenses owing is $600. So is that an asset or liability if we owe bus expenses? Good, liability. So we're going to call it accrued expenses. Accrued just means owing. Just look at the spelling on that. Accrued to R-U-E-D. $600. So we add it to the credit side as a liability, where we add it to the debit side. Good. It's for bus expenses, so we're going to add it onto bus expenses. Just check we balance down the bottom. 134,650 on both. Good. Repairs and maintenance split with club and kitchen. So you see I've got $1,500 here. So I've typed in club at the end of this one. So we'll put repairs and maintenance. Oh. And kitchen. This makes it a kitchen expense, which means it goes in the kitchen activity statement. And 40% is the kitchen. 40%. And that's times $1,500. Now see how it doesn't balance? We added 600 on this side. So we're going to take it out of that figure. So that one there will be the club one, and so we'll multiply that by 60%. So now it's 60-40. Good, those two balance. In the last bit, we've got depreciation on equipment, 2 lots of equipment, and the bus. So type equipment depreciation. So depreciation is writing off the value of the asset as it gets older. And last one is bus depreciation. Alright, so the figures, when we add it on the debit side, for the depreciation expense, we also add it to the accumulated depreciation up here. Accumulated just means added up over time. So the first one is 20% on the equipment. So equals 20%. And the equipment, 34,000. So we're writing off 6,800 of depreciation. So we add it here, and then we add it to the accumulated depreciation up here. And you can just go plus that 6,800. Make sure you balance down the bottom. The equipment depreciation, again, that's 20, what do we say? 20%, yep. And times the equipment in the kitchen, 3,000 there, so we're going to add 3,000 up here. And the bus depreciation is 25%, I think. And you've got to multiply that by the value of the bus, $58,000 worth of bus. And add it here. Where do you add it on this side? Good, up with the bus. And we balance down the bottom. That's the hard bit. And all those new things you just put in, they count for merit and excellence. The ones we've got to calculate, like the 20 and 25%, are excellence grades, where you've been given the figure, such as bus expenses, $600. That one there is just a merit figure. So now you've got to colour them in. So let's decide on a colouring scheme. We put all these ones here, property, plant and equipment. We made them all blue from memory. I'm not sure. Just try and move some rubbish out of the way. Right, so let's actually start off with kitchen activity. Let's colour those in yellow. So anything to do with the kitchen, apart from property, plant, equipment, we'll colour in yellow. So kitchen cleaning is your first one there. So we'll drop down. Gold might be better. Just hold your control key down and click all those things that relate to the kitchen. Not the equipment, that's property, plant and equipment, but everything else. The inventory at the start. We've got kitchen purchases. We've got kitchen inventory. No, not that one. That's actually an asset. Kitchen repairs and kitchen depreciation, and just a 2 on the side. So we've got 1, 2, 3, 5 on the debit side and 2 on the credit side. Just this kitchen inventory here is an asset, so that'll go in the balance sheet rather than in the kitchen equipment part. Next part we're going to do is the income statement. So income statement, we'll do all those green. On the debit side, these are expenses. So you can click on the first one and any expenses. And the last one being bus. And on the credit side, you're looking for income. So the income, just a couple there, community grant, and the main one, which is subscriptions. So that'll go in your income statement. Next thing we'll look at is your property, plant and equipment. These are assets that last a long period of time, normally depreciated in value. So we can normally find them by looking at the accumulated depreciation. So all of these 3 here, we'll colour those in blue. And everything else must be our balance sheet, and we'll colour those in red. So assets on the debit side, so bank, the kitchen equipment, subscriptions and arrears, they're all assets. And on the credit side, these are liabilities and equity. The equity is the accumulated fund. And those 2 new liabilities we added at the bottom. So that's the end of the video. Your task is to go and put that through into the right statement. So all the activity, you're after a kitchen surplus or a deficit, whatever that is. And that kitchen surplus or deficit you'll transfer through to the income statement. Good luck.